It is a sea of red indeed as far as stock markets across the world are concerned. Now, what is happening on Dalal Street is a reflection of what's happening around the world.
We are seeing some correction in the market. So I would say it's not a crash, it's a correction.
Also, India cannot be totally insulated from that.
Both Sensex as well as Nifty are down close to 3%. The Indian investors in a single day are all set to lose over 15 lakh crore. That's what the analysts are estimating. That's how the trends are looking like at this point in time. The first reason is a fear of a possible recession in the economy in the United States of America. Why we are saying it? Because on Friday, the unemployment data that came out of about 4.3% was something that the analysts did not expect. The slowdown, was more than what the economists were expecting. So that is reason number one. Reason number two is the policy change that has happened as far as the Bank of Japan is concerned. The Japanese currency has appreciated against the dollar. That's the reason why Japanese markets have tanked almost 10% as a result, has also been witnessed on Sensex as well as Nifty in India. And the third and another very, very crucial factor that's leading to this bloodbath is the rise in geopolitical tensions in the Middle East.
I think the main reason could be that Bank of Japan, after 17 years, they've raised the rates and they are in that cycle. That is pushing the yen against the dollar, and yen is becoming stronger, and that has triggered the carry trade, Japanese yen carry trade positions unwinding. So what we are witnessing and what we are looking at is unwinding of carry trade, and that is creating selling pressure in the markets world over.
Number one, the geopolitical tensions between Iran and Israel, and US jumping into it, and there are other countries like Yemen which are already embroiled into it, Palestine. So a lot of geopolitical tensions in the Middle East. This is one reason. The second reason is that the Bank of Japan increased their interest rates by 25 basis points lately. Now, for almost 30 years, it was a zero interest rate. Investors or traders in US, they used to borrow yen at almost a zero interest rate, and they used to carry this yen and used to buy risky assets like Bitcoin or maybe invest in equities and other stuff. So the cost of carry trade increased. So that is also one reason we are seeing a huge sell-off in countries like US and even in Japan. So Japan saw almost 10,000 points on the Nikkei. So I think that this global sell-off is also due to the fact that it is expected that US Fed would be dovish on the interest rates. They have not reduced the interest rates at all. People are following the Federal Reserve, including India. I think that we have an impending credit policy, and Shaktikanta Das is also looking at the US Federal Reserve once we see interest rates coming down from there.